A pleasant day to the young and enthusiastic learners. I am Dr. Shobha, Principal, Associate Professor and Head of the Department of Corporate Secretaryship, KCS Kasinada College of Arts and Science. So today I'll be presenting on the other concepts of income tax. So PAN, this is a term which all of us hear quite often. PAN is nothing but the permanent account number. It is a number allotted by income tax authorities to an income tax assessee. So a person who is assessed to tax is allotted an account number called as PAN, and this PAN is allotted for the purpose of identification. So the features relating to PAN: applying to the assessing officer, person carrying on business or profession, charitable trust and institutions, person whose income exceeds the exemption limit should apply for PAN number. Central government will specify, assessing officer would be allotting the PAN. PAN has a new series, so if they are under the old series, they'll be allotted a new PAN. Assessees who are allotted a PAN number shall quote it while filing the return in all challans for payment, in all documents submitted to Central Board of Direct Taxes, and while deducting tax at source. Return under economic criteria. A person residing in any of the specified areas and satisfying any one of the following conditions must file a return of income on or before the due date. If he is in occupation of an immovable property, owner or the lessee of a motor vehicle, person incurring more than 50,000 rupees as electricity consumption bill, expenditure on foreign travel other than pilgrimage, member of a club whose entrance fees is more than rupees 25,000, and a holder of a credit card. Next concept is the block of assets. Assets which belong to the same group with the same rate of depreciation and nature is called as a block. So a block of asset is nothing but a particular asset with the same rate of depreciation and same nature falling in the same group. Next, exempted incomes. Incomes for which income tax is not charged is called as exempted income. The exemption will be based on the nature of income, or it may be based on the status of the assessee, or it may be based on the source from which the income is derived. For example, agricultural income is exempt from tax. For exempted incomes: agricultural income, any amount received from HUF, share of income from partnership firm, interest on government securities for non-resident, leave travel concession provided by an employer to his Indian citizen employee. Agricultural income. Agricultural income is exempt from tax. So, income earned from the following three sources is an agricultural income: any rent received from land which is used for agricultural purpose, any income derived from such land by agricultural operations including processing of agricultural produce raised or received as rent in kind, and any income attributable to a farmhouse subject to the condition that the building is situated on or in the immediate vicinity of the agricultural land and is used as a dwelling house or a storehouse for agricultural produce. So agricultural income is nothing but the income from the agricultural land, income from agricultural produce, or income from a building on the agricultural land or in the immediate vicinity, that is near the agricultural land, and which is used for agricultural purpose. Then the essential test of an agricultural income: the land should be situated in India, the land should be used only for agricultural purpose, and the rent or revenue is to be derived from the land. Fair market value is the value of a capital asset that would be fetched in on sale in the open market. Fair market value is the value of the capital asset which it would fetch on sale in the open market. Next, capital income. Capital income is nothing but an income that you derive on a one-time basis. It's not a regular income, it is a one-time income. So compensation received from the employer for loss of employment, profit on sale of technical know-how, all these are capital income. Revenue income is routine in nature. This is not routine. You receive it it's a one-time income. Capital expenditure, it is a one-time expenditure. So it is not a routine expenditure like rent, it is a single time expenditure. An expenditure incurred to acquire a fixed asset or in connection with installation of a fixed asset. So all this is a one-time expense. So that is a capital expenditure. So few capital expenditures: expenditure on reconstructing or refurnishing of a business building, expenditure on know-how, expenditure on maintenance of a business reputation. So this is for your capital income and capital expenditure. So thank you and happy and smart learning. Thank you.